Okay, everyone, welcome. Second video of the day. I forgot to cover the broad indices, I believe, in my last video. So I want to go through those and go through some different sectors. Just look at what's going on across the broad market. Everyone knows, if you've been following me, I've been looking for more downside. I pointed out those downside targets so we can look at those again. And let's get right into it, guys. Drop me a thumbs up on your way out, at least. All right, triple Qs. So I'm on a weekly chart here, but I'm going to flip to the daily. On triple Qs, we've got the lows, the most recent lows that we hit right there at 318, right around 318. And we are heading down there. We are at a potential support line. Let's keep an eye on it. I think it's going to break, but this red line, this uptrend line that I have, if you go to the weekly chart, you'll see that that's the upper end of the bull market price channel over the last decade, or longer than that, since 2009 basically. So this is the area of resistance and this upper price channel. As I zoom in, you can see that basically we popped to the top end of this upper price channel. This was primarily due to the Fed and how much money pumping that they were doing. And you can see as we've come down on this weekly chart, we're right there at it now. So we could bounce here. This could be an area for, a small bounce. We'll keep an eye on that. I think we're going to break to the downside, to be honest. And again, you see on the weekly chart, the big negative divergence that has been building for a while. And really, it's just a huge negative divergence. It's all this price action on the weekly chart has been divergent highs. So that tells me that we're likely going to see a pretty strong break of this trend and fall back within this price channel here. Where I think the Fed, we haven't heard anything from the Fed. So I think the Fed is probably comfortable with the markets coming down to the bottom of the price channel. This is where they're likely going to try to step in and hold the market to keep it from breaking its longer term bull market, but they want to probably walk the market down here. All right, so that's what I'm anticipating, more downside relatively soon. Now looking at the daily chart, you can see, and let me kind of clean this up from my weekly, but on the daily chart here, we did have bullish divergence. So this low that we recently made back on February 24th was a divergent low. All right, so we have bullish divergence. That is, on the daily chart, a bullish setup, but it doesn't mean that it's going to play out. So what I think is very likely going to happen is we're going to continue to sell down. We're going to burn through this bullish divergence, and it's going to look something like this. And that's going to be pretty bearish. The fact that we had a bullish setup and it didn't pan out, it sold down and burned through the divergence. So if you see that, and I don't know if it'll show up, but if we see that, that's just more than likely telling me that we have entered a bear market, okay? And, from the highs, Qs as of right now is already down 18.5%. So 20% by definition is a bear market. A little bit more downside and we will be officially in a bear market. Again, we have been shorting this market since January 4th, right up here. So we've, captured pretty much all these gains, looking for some more. But, the potential is all the way down here of about 35% or so downside. Maybe not that much, but again, that's the bottom of that channel. All right, so that's what we're looking for on Qs. Oh yeah, and then going back to the daily, just the next level of support. Obviously, we have the lows right here, and it's about they're about 318.50. And then the next level of support is right there at about 298, 299. Okay, you can see all the reactions. Those are resistance. There's 3 reactions there. And then from above, support. So you got 5 reactions on that trend line. So if we're going to head down, we're probably going to head straight down to this 300. And then that's where we're likely going to get somewhat of a bounce, probably a bear market rally. We will be in a bear market officially if we are down here. And then we could see a bear market rally, which could take us up to the top of the trend line. So maybe something like this. And then we get that bear market rally that bounces us up to here. And then we continue the bear market. All right. So there's just longer term potentials of what I'm looking for. First things first, we got to kind of take out today's lows. Okay, the S&P 500, which is full of defensive stocks, so not really the best for trading if you're trying to catch a big downside move. I think it makes more sense to catch the momentum indices like triple Qs or IWM. But again, this is more reflective of the broad market. On IWM, on SPY, SP 500, we have a potential we have bullish divergence. This low that we recently hit on February 24th is a divergent low. So there's a bullish setup there in momentum for sure. If we continue to go lower, we're going to burn through that divergence. All right. If you see that, that's just another sign that we've likely entered a bear market. Okay. From the highs to where we're at right now, we're down about 12%. So this has a ways to go before officially in a bear market. But again, we'll start to see the momentum, get burned through, if we're gonna enter that bear market. And you'll start hearing about the media talking about how, we're in a bear market and everything's bad, but they won't do that till we head down a little bit more. Right now, you're still hearing about the buy the dip crowd. So we have on this one on the daily chart, we got a couple things going on. One, we have the lows right here at about 410.75. If those get taken out, next level of support is about 400, okay, just slightly below. And that's not a huge level of support, that 400, but there's a small little gap to fill. So I think we'll probably get a small reaction. There's much better support lower, but I'm going to have to tighten it up and really find a good key level. So I think potentially lower. But on the weekly chart, bigger picture, and it's important to always keep the bigger picture. This is going back to 2009. This is your bull price channel. The bull market ended actually. So this is when I started the channel in 2018. I started the channel from a bearish perspective because it was basically right here is where I started the channel. We had broken the bull trend, so it looked like we were heading into a bear market. But the Fed stepped in. All right, they pumped the market up right to resistance. COVID hit, crash. Fed stepped in again. All right, now we have record high inflation. It's very unlikely the Fed's going to be able to step in. So most likely what they're going to try to do is just walk the market down through guidance and talking, and that's kind of what I see. And we haven't seen the Fed step in so far. Now, this one, you can see we broke that trend line, all right? So we were above it, the red trend line here, we were above it, but there's your sell signal. Big weekly sell signal, a break of the trend, and it's really been down ever since. So I think this will likely continue over the next months to probably years. And, it looks to me like we've just started our way into a bear market. It's not an official bear market yet, but again, we don't make money waiting after the fact till when it's a bear market and then say, okay, I want to short now because it's a bear market. Usually by the time everyone realizes it's a bear market is about the time you're going to see a pretty strong, impulsive bear market rally. So, all right, we're seeing more selling pressure. 400 is the next level of support. IWM, small caps. Again, big sideways trading range. I'm on the weekly chart here, so this is bigger picture, but there's your big sideways over a year-long trading range. All right, we broke that support right there. Big impulsive breakdown, sell signal, rallied up into resistance, and we're starting to roll over. All right, so my target on this one, if you really look at the weekly chart, you've got a flagpole. So you have this bear flag. There's the flag and the flagpole, and you take that, measure it down, and it puts us down to about 173 to 170. All right, right down in here is the next area of good support down there. So that's where I think we're heading. And as you can see, the prices are, as of right now, pointed down, selling off. So it looks like we are heading lower. Okay, so let's look at the FANG stocks because these are the generals of the market. This is where a lot of the strength has been over the duration of the bull market for the last 12 years. And I want to kind of analyze these real quick. Amazon, all right? So this is the Great Recession lows, but the trend that I have is really started back here in about 08. And you can see, I apologize. The Great Recession is actually right here. This is your Great Recession. So there's your Great Recession lows back in 08. We tagged support here. We had a third tag. So we established, there's a trend. And there is a big, long, over a year-long topping pattern. Bullish breakout to the upside. That bullish breakout So we broke above here, but that came with big, long negative divergence, telling me that this breakout was likely going to be a fake out, and sure enough, it was. And there's a sell signal, all right? Big weekly sell signal on Amazon. So we had a break of trend and a little back testing and rolling over, now approaching the lows. Okay, so very bearish price action in Amazon. This is one of the mega cap tech stocks. If Amazon falls, it has a lot of impact on dragging the indices down with it. So I don't see support. I see this whole thin zone right here. I don't see any real support on Amazon till we head to about 2050, 2046. All right, somewhere right in there is where it looks like we'll find relatively decent support. All right, Google. So Google's bull trend on the weekly chart comes from 2015, and you can see it's all the way down here. We then started this COVID uptrend. So this is pretty much since the COVID lows, and it just marched higher. Broke trend. Sell signal really came right here on November 22nd, and we were making a series of lower highs and lower lows. You can see we're going lower. So I don't see support on Google till we head down to the major trend, which as of right now is down here, 1837, 1900. I don't know when we'll hit it, but wherever we hit it, that should be major support. Facebook, entered the bear market a while ago, but again, here is your 2012 trend. Facebook didn't, that's when they IPO'd back there, and you can see this bull trend. COVID broke, but the Feds, saved it. But then we had a big sell signal right here, and it's really impulsive selling. So clearly in a bear market, Facebook's down from the highs 50% already, and potentially a lot more to go. So probably going to find some sort of support down here at the lows, about 141. The strongest of the bunch has clearly been Microsoft and Apple, and for good reason. They're very, strong companies. Microsoft, here's your COVID lows on the weekly chart. We were walking up a trend line. Not a super impulsive sell signal, but you could say it basically came right here. We had a back test and a failure. All right, so right in there was a good sell signal. And it's been downtrending ever since. So we're still in a downtrend. We've got some support right about where we're at 284. We break that, we should head lower. And we don't have a trend till we get down to about 232.19 is the next level of support. Microsoft also has the potential to head a lot lower because you have a major trend line coming off the 2009 lows. Lots of reactions along here. There's another one, and that's all the way down here at 123. So that would likely be the bear market target. If we're going to head down to this area, then we'd probably find some good support down there. And at that point, Microsoft would have sold down 65%. So that makes sense. If we're going to enter a bear market, that would probably be the final target. And Apple. So Apple's bull market trend really started about in 2010. And you can see we hit support here. And again, I'm on a weekly chart. So this is bigger picture. Support. And so that would be the final target there on that one. Would be down here at, 64 to 68, depending on when or if we get there. And Apple, if it were to fall that much, even from the highs, would drop about 65%. So again, this is big bear market territory, but this is the potential that we have in this market. The reason why the market is way up where it's at is due to the Fed. All right, I think everyone needs to understand that. So that is the nature of where we're at. And if the Fed, the Fed's not going to want it to head down here, at least not quickly. But I think if they're, they could potentially allow it to walk its way down there slowly and be okay with that. So that's what we're looking at right now. Apple, we have this bearish rising wedge right here. We broke to the upside, but that breakout to the upside came with negative divergence. All right, so that is right there. So that's that's a high probability of failing up in here. I know it looks like a mess, guys, but we're back within the bearish rising wedge, likely heading to the bottom. We're gonna, we got the 200-day, but we're likely heading to the bottom, and then we're probably, I would say the probability is we're gonna break to the downside, and at a minimum head down to right around $97 to $100 range. Okay, let's look at some individual sectors. Here's the financials. I covered these in the morning video, but again, that key level of about 37 is the level I've been looking for. Looks like we're breaking, guys. So that's a sell signal. You know, we have about 2 hours before the market closes, so they might, you know, jump in and try to save it, but it's down there a ways, so I think it's probably pretty unlikely. Looks like a sell signal in the financials. You know, usually when you see financials and tech selling off at the same time, it's just broad-based. It's just bad news across the board, and you're likely going to see a broad-based sell-off in the S&P 500. We're also seeing gold rallying, and the dollar's rallying. So across the board, I'm seeing a risk-off, safe haven trade. All right. So financials looks like it's heading lower. Got some support down here at 35.09, so we'll watch that, but looking like a sell signal to me. Energy, this is XLE, so energy sector. Again, not something I'm interested in shorting due to the, you know, there's just headline risk, a lot of headline risk, and it's super volatile right now because of the, you know, the conflict. So we're just going to watch this. I'm looking for a short on this, but I don't see enough in the charts to tell me it's time. So this could continue to rally. And it's likely going to be a really good short in the future. But for now, you know, I'd rather be long than short. Here's XLK. This is very similar to triple Qs, but it does not have Amazon. One thing about triple K or XLK is on the daily chart, you've got this uptrend line here. We put in negative divergence up at the highs. All right, that was telling me that we're likely going to start a downtrend. We got a sell signal and we broke back here in January. All right, so you broke. We had a back test, two kind of back tests, and then down she goes. All right, we're breaking this support at 147.04. That was kind of support here, support here. We're so far as of today, we're below it. So if the selling just increases, that's just, you know, that's an objective add-on entry, this break of support, you know. So it looks pretty bearish. And XLK to me is likely heading down to, you know, about 125.30 or so. XLV, so this is more of a defensive sector, but if you're going to have a broad-based sell-off, this will sell off as well, just probably not quite as much. So it's not really that interesting from a short perspective because I just think there's better opportunities to make money shorting the tech sector or the small caps. But, you know, on this one, we have this uptrend line. We have this bearish rising wedge here on XLV. It broke and just kind of put in what looks to be almost like a head and shoulders top. We have a head and you got the shoulder thing. So the neckline or the area of support's right about 125.65. It's not that interesting from my perspective, so I'd probably just steer clear of this one. This is more of a kind of a duck and cover area where people are probably trying to find some safety. Semiconductors, SOXX. This looks like a good area. You know, this is a good shorting mechanism in my opinion. Semiconductors oftentimes are the bleeding edge of tech. So when it's risk on, these things rally really strong. When it's risk off, they collapse. So I like this one for a short. SOXX, big negative divergence. All right. And again, on the daily chart, so these are all divergent highs. Bearish rising wedge. We broke to the upside with that negative divergence, telling me that this was likely going to fail. It did fail. Broke to the bottom of the bearish rising wedge, and we're taking out support as of right now. So support on this is 434.84. You can see we had support here, hit it right there, and just starting to break. All right. So as you can see, we're starting to, you know, break down. So they might come in and try to save this into the close, but if it continues to sell off and the selling gets more impulsive, that is a sell signal, and that would mean that we're very much likely going down to my next level of support, the support zone, which is about 387.80 down to about 384. So quite a ways down there. If we get that sell signal, I think we've got another 10 to 12% to the downside in these semiconductors. And so things like Qualcomm, you know, you can see Qualcomm's just under the 200-day moving average. Not, you know, they might try to hold on to that today. They might let it go and it might break. So we'll see. But we're starting to break down across the board, guys. So in general, shorts are working. The gold miners, you know, you flip over to the gold miners, they're all up, you know, so that these are all the long trades I've been pointing out, and then the shorts, you know, are all selling off. So we might have bigger things going on, and that's why I continue to talk about a bear market. You know, I've started posting that stuff saying I think we're entering a bear market, guys. So only time will tell who's right, but that's what it looks like, you know, especially today. Okay, leave me a thumbs up. Check out the stock market technical analysis course I put together. Link in the description below, and I'll catch you guys on the next one.